Hello guys, welcome to another market review. We're gonna kick off by looking at the euro as usual. So if you remember where we left off, we were talking about how the euro was sitting just at the mid-range and it was previously a level of SR. And there were some solid reasons to be a little bit more bullish than bearish for the past week, and that was the fact that we had the biggest inefficiencies to the upside, and we had been provided with daily closes that looked bullish just from this trend line that we broke before all this leg to the upside. So the trigger, if you recall, for the longs was waiting for price action, for some more compression below this trend line and wait for a break above the new weekly open and the trend line. However, the week started a little bit, um, you know, differently than what we had imagined, because immediately the plan was thrown out of the window. We opened with a gap, and that gap was significant. It was a gap of around 26 pips, 30 pips, sorry. And that meant that our trigger, which was compression and a break above the trend line, had already, we couldn't use it anymore. It was useless. Instead, we had this massive gap and prices trading above this weekly open. So, what was the play for the past week? Well, first of all, you shouldn't have traded on Monday because it was bank holiday, so the market was dead, and you know this is not something that you want to make any analysis on. So come Tuesday, market moves a little bit more, but it doesn't do a great deal in my opinion. I didn't see any opportunity here. We rejected from the gap on Tuesday. We reclaimed the monthly open on Wednesday. Sorry, the weekly open. And then we had this big week around 2 p.m. and that caught my attention. I said, okay, we were not able to push above. Then we had this candle, which a little bit insignificant, but this candle here was a trigger for a short. And it was a very easy trade. And the reasoning for that was, well, we've rejected from this gap, from the gap. So we haven't closed it and we've traded above the weekly open. We've had this pump which led us nowhere. In fact, we've printed a bearish engulfing below the weekly open. And this candle was looking really bearish to me. So what I did was, well, I'm gonna go to my other chart because yeah, this one's better. Yeah. What I did was basically selling the weekly open with a stop here. So the reason for that was, well, as I mentioned, failure to really do anything significant after reclaiming the weekly open and rejecting the gap. We've printed a bearish engulfing and we still have a gap open. So it was a very easy trade to at least lock in, um, you know, some pips from the weekly open towards the gap fill. But it even went a bit lower, exactly into the place where we wanted to maybe get long from, which was this beautiful trend line that I drew. Look at the perfect reaction we got from there. So those to me are the cleanest place that I can think of. from last week. And once we recovered this weekly open, it was Thursday and Friday, so the week was ending, and I really didn't think this market had more juice in it, and that, you know, buying the weekly open on a pullback was something worth doing. But it still gave a decent move into this low here, where we also had, you know, this was a an imbalance, I think a daily imbalance. So we just rejected from that zone. Be perfect. So when we look at the daily, last week we had a bullish bias, and I'm happy that we got that right, even though for 3 days we didn't go anywhere. This reaction here was pretty telling that the market wanted to go higher. So waiting for longs on a discount was the right choice. So for the next week, I want to keep being long this market. And I think the most reasonable target I can think of is just around the May monthly open. We're going to have a new monthly open and weekly open because June begins on Monday, just in 4 hours. So the play is very, very easy. Really, we don't have to complicate it. The weekly bias has been bullish for the last 2 weeks. The daily bias is, again, even though we had a little bit of indecision, I think this is good because it gives us a more easy way to get long into the yearly open and the May monthly open. So we pulled back a bit on Friday, and honestly, I think that, you know, if we open with a weekly open around here, retest this trend line, reclaim the weekly open, that's your long, this is your stop loss, and you are moving all the way to the monthly open. Because also think and keep in mind that, you know, with oil being so high all this time, the euro has held up pretty well. So I think this is what we're going to get. And from here, I also think this is a great short. I think this is a very good play, but I'm not too sure it's going to work. I mean, if I see various price action here, I will take it 100%. And it also depends on, you know, how much we move, because, you know, yeah, I mean, around 100 pips um, could be something that you can fade, no? Once we are extended past that 100 pip weekly range, you can start fading moves on either side. But yeah, this is pure technical analysis and what I see really, because, you know, reclaiming the open would be really, really bullish. I think we would take out this high here if we did that, but I'm not too sure. So hopefully we get a, you know, slow Monday where we drift lower, then we have some bullish price action, reclaim that new weekly open and monthly open, and then we just move straight into that yearly open. So that's the view on EURUSD, and I wanted to mention, I'm gonna get rid of this indicator. So I wanted to mention AUD New Zealand because this market has been going one way for the last 2 years. And the last week we closed with a bearish monthly engulfing and a bearish weekly engulfing. That was due to the central bank of New Zealand they announced that some hikes are coming, I think as soon as June this year. So that's reduced the yield spread between uh, the AUD and the New Zealand. So with a bearish monthly engulfing and a bearish weekly engulfing, every move to the upside should be faded, and you would look for an extension lower. For sure, this needs to be adjusted lower, but you know, AUD has been a strong currency, even stronger than the euro. So I think that maybe a better way to express this New Zealand dollar strength is the Euro New Zealand short idea. And if you remember, we traded Euro UD for the very first part of 2025. It's a market that I like to trade because it has some very easy plays. It gives very clean SFPs when it ranges, so you can play the extremities like here. But at the same time, when it goes, the differentials in spreads between the euro and the AUD are huge. And if you remember the first part of the year, we had AUD going up a lot because the RBA was getting hawkish, and that resulted in Euro AUD selling off in one leg. So this was one of the easiest shorts that I have ever seen. Just sell off from the yearly open, and it was 3 months of continued selling. And EURNZD did some of that move, but it pulled back. It retraced that nearly into the origin, and now we are seeing that strength coming back. So I think Euro New Zealand is gonna do something similar to what Euro UD did, where you're gonna just see it move for the next weeks, just completely going down, and there's no buying. Every update is followed by a down day that's even bigger. So I think we're gonna get something like that, and the only area where I would like to get out of, I think, is the 190. I think this box here, and yeah, maybe the 187, which is, a lot of support happened here, so it's a great zone to target if this trend has legs. So the way I want to play this, okay, I'm get rid of this because I don't think these lines matter anymore. So we can see this more cleanly. I think this is gonna unwind and do all this move just like we saw with Euro UD, right? Where it undid all of this. I think something similar is gonna happen here because the euro, the ECB is not gonna hike. They are on hold. So, this differential in yields it's not a matter of a few days and it's gonna be in price. It's gonna be priced in. It's gonna take some time to be fully priced, in my opinion. So I think you just want to take a flow approach to this and mark the monthly and new weekly open and just really don't complicate it and just get short from me, right? Um, you could do, and maybe this is what I'm gonna do. As soon as I get a trigger from the weekly and monthly open, I'm gonna get short because I don't think this has any reason to pull back into this zone. So I think it's just gonna sell off from here. It might pull back after it's sold off a bit, just around here. Then boom, it continues to sell off, right? So I would do half size here. If I just get short from the open, then maybe wait for a retest, some price action to be bearish at a key zone, and then engage short again and add another more risk to it. I think this some kind of trades where you don't want to overcomplicate things and just go with macro and what the chart is telling you, even though it looks surreal, but these things happen. So this is your New Zealand, and New Zealand USD is another one that I want to trade. And of course, if I want to get short Euro New Zealand and I want to get long Euro USD, that means I'm bearish USD and I'm bullish New Zealand dollar. So New Zealand USD should be the better long, but I just don't have a read here as good as I have it on the Euro USD. But I think we should at least trade into this trend line, which is in line with these prior highs, and we could quite possibly break above here, hold, and trade higher. That could happen, especially if New Zealand um, keeps being bought, and we see the euro reclaim this yearly open. That would mean 100% that the New Zealand dollar is just gonna hold here and continue to move higher. So I want to get long here, and I will look for triggers around that weekly and monthly open. Some bullish price action, but again, this is just going in one way, and it's very hard to, I think it's actually impossible to see. Well, yeah, you buy this high here because no, there's no telling. This is just one way move. And yeah, I also don't see why you should buy this prior high. So again, just let um, that Monday candle unfold and see where we can get there. And in the last place, I wanted to cover USDCAD. This is a market that I've never traded, but I do see something relevant, and this is a bearish engulfing on a daily time frame in a market that has been going up only. You can see this massive leg here, and then you have that. So if you mark this daily low before we broke structure, you can see the Friday candle swiped it and closed below. So this is a chart that I think has potential to keep going lower. So any bearish price action, I will look to trade this lower. I think it should at least trade into these lows. And I think this all lines up well because I'm bullish Euro USD. I have a target in mind, and this looks bearish. So if my read on the euro is right, this should keep going lower. And yeah, this is a very feasible target. Yeah, it's very, very easy. Maybe I should even target lower around the 137 level. But yeah, this is my view on the market. And I also, this caught my eye. This is Palantir. You can see a strong breakout of this downtrend. Very easy to see with just this trend line that strength came back, and shame on me because I didn't get long on Friday. I wish I had done that, but I didn't. So the market has moved to the upside without me, and I will just look if I can get any pullback to get back into this, because I think this thing has legs, and the market, there's a very strong risk on sentiment, and you just don't want to overthink things too much when you have a strong breakout. Especially this weekly looks pretty fucking good. So yeah, maybe you should even go for new highs. But this is more like a swing, of course. This is not intra-week like the currency markets I normally trade. So this is all for next week. I think it's going to be a very fun week. I hope we nail this analysis on the euro, the dollar, and the New Zealand dollar. And see you guys next week.